Good morning. We are ready to start today's event. My name is Rasmus Køjborg, and on behalf of HC Andersen Capital, I would like to welcome you all to today's event, where we'll focus a bit on the US business of Better Collective and also the latest acquisition in Canada. So you can say this deep dive on the US turns a little bit into a deep dive on the North American business for Better Collective. With me today and to tell us more about the US operation and North America, we have the pleasure of welcoming co-founder and CEO of Better Collective, that's Jesper Søgaard. So welcome to you, Jesper.
Thank you very much, Rasmus.
And before I hand over to you, Jesper, I'd also like to give a warm welcome to those of you who listen in today. There's a chat room in the right lower corner. You're welcome to ask questions, and you can both do that in English, and you can do it in Danish if you're more comfortable with that. And of course, we record the presentation here and put it up on our platforms later. But with that, I will hand it over to you, Jesper.
Thank you very much. Thanks for giving us the chance to speak a bit about the American business of Better Collective and what's going on over there. Just a quick look at the agenda. So a short introduction to Better Collective, and then a focus on the US, the growth there, what we do in the States, and then rounding off with Canada and the acquisition we just announced earlier this week. So who are we? We are based in Copenhagen with the headquarter. We listed the company in Sweden on Nasdaq Stockholm in 2018, and we are significantly owned by Christian, Rasmus, my co-founder, and myself, plus the management and the board of directors, equal to an ownership of more than 42%. And we have been around since 2004, and we are the leading sports media group in this industry. If we take a look at where we are present, as mentioned, the headquarters is in Copenhagen, but we actually have offices across Europe and the States. Predominantly in Europe, we have some market-focused offices, and then we have also a big operational unit in Niš in Serbia. And if we go to the US, we have two offices, one in Nashville and one in Fort Lauderdale. We also have quite a lot of employees that work remotely in the States. So in total, we're more than 200 employees in the US and working with the American and soon to be North American market. All right, if we then dive into the US business and the development we have seen there in Better Collective, it's quite amazing growth that we have achieved in recent years. And just to give a very short introduction to the development of the American market, is that we actually had a starting point more or less in 2018 with the repeal of the PASPA Act. So that change of the legislation that enabled states to decide to regulate sports betting, land-based and online. And therefore, in 2018, we had essentially zero revenue coming from the US. Then in 2019, with this opportunity, we made the first acquisitions and also a media partnership collaboration, giving us both a presence in the States and also some attractive assets, that being rotogrinders.com within DFS, the Daily Fantasy Sports universe, and also Vegas Insider, a legacy household brand for sports betting content in the US. And then lastly, the media partnership with NJ.com, which is the leading local media in New Jersey. That was the first state to launch in the US. And as you can see, that led to revenue of 4 million euros in 2019. The following year, we acquired Atemi at the end of the year, which gave the entire group of Better Collective paid media capabilities, which also were able to utilize it in the US, also driving paid campaigns for that market. Obviously, it's worth mentioning that we also had COVID-19, so the business, both on a group level, but in particular in the States, were affected by COVID-19 and the lockdowns we experienced. So revenue growth was strong compared to the prior year, but had it not been for COVID-19, it would have been even stronger. But we reached 10 million euros in revenue. Then 2021, I would probably rate as really the breakthrough for us in the States, where the existing business performed very well for the full year, but we also closed the acquisition of Action Network in end of May 2021. Action Network is sort of the leading product in the US from a sports media perspective, where they both have created a great app with the BetSync product, where you can track your bets with various bookmakers. And also on the content side, they have very strong content of high quality with a great editorial team, and they have really been able to grow their brand in a very fast period of time. So we saw them as our toughest competitor, and we're very pleased that we were able to acquire them for the sum of $240 million around mid of 21. As you can see, the combined US business then, both with the existing and Action included, led to revenue of more than 47 million euros. And we also gave a target of expectedly more than $100 million in 2022 coming from the US market. And here the most recent development is we have made a media partnership with the New York Post, and we have also seen the state of New York going live in early January. All in all, and very like huge growth and still very ambitious targets ahead of us. But we're doing well, and I think we're definitely on track to meet these targets. You may also notice at the bottom we had the number of states we're live in, and currently that is 16 at the end of the year last year. And I highlighted New York that has just gone live. It is just beating all records in terms of the new customers coming to the market, the sports handle in the state, and also the gross gaming revenue generated by that betting activity. We expected a lot from New York, but it has definitely lived up and maybe even surpassed the expectations we had for how much activity we would experience with that. What you see on this slide is us giving a sense of how big is the market now, and what are we expecting will be added to the market in coming years. And as you can see, we currently have states where we are able to operate with a total population of 121 million people. In the near term, meaning possibly in 2022 and 2023, we expect more states to go live. That will increase the target audience with another 60 million people, so a growth of 50% in terms of people. And still we are just at sort of just around half of the American population. And I think the really big states that we still have further out are California as the main one, which we expect will have a very big impact on the market. But again, in this slide, that is not really included. Then looking at our US performance and including the start of 2022, as you can see, we have here in the bar charts 2020, which was surpassed by the first 6 months of 21, which was then surpassed by Q4 of 21. And then we're now sort of just with January 22, we are more than 50% of the whole of Q4. So there is a significant growth happening in this market. And of course, to remind, January was boosted by the New York opening, where we achieved revenues of more than 13 million euros. What was encouraging to us to see is sort of an increased base as a result of that bigger audience that we can now target. So with this state rollout, we see a click-on growth effect to our business. And on the right, you have the target of the more than $100 million, and we are sort of tracking very well to reach that. We will, when we get to Q2 and the start of Q3, get into the weaker period of US sports, where not that much will be ongoing, but then with the start of NFL in September, we'll come back to what is the high season in the States. And then finally, a small update on Canada, because Canada is actually a very exciting country right now, because it's expected that Ontario, as the first state, will go live with online sports betting April 4th. Ontario is actually a pretty big state, also in a context of the US. If we compare the GDP of Ontario to the states of the US, it would be, as I recall, number 6. So the 6th biggest state in terms of GDP. So it is a significant market opportunity that we are seeing going live April 4th. And it's with a legislation that is very liberal, so there will be a lot of entrants. Taxation levels are attractive from a market perspective. So we really think we're going to see high activity and a lot of competition, which is exactly what we like with our kind of business, where we compare the bookmakers and we, with our content, can engage the users. And we just announced this week that we have made an acquisition in Canada Sports Betting, which we view as the best positioned sports betting content site in Canada, which is a very strong foundation for us to grow that market when it goes live. Canada has been a bit special case in the sense that the market is sort of allowed for international operators to operate, but now they are implementing a framework so they can start to tax the betting that is ongoing. So therefore, we have some established sites, and this one was the leading one in our opinion. We expect more provinces to regulate, and what will be a slight difference compared to the US is that ice hockey is the biggest sport in Canada. And therefore, when I just spoke about Q4 being a bit boring for the US, it's actually different for Canada, where Q2 with the NHL would be a pretty big quarter also because of their interest in ice hockey. And now I spoke about the acquisition. We also have some of the US brands that are relevant. So Action Network, Vegas Insider. We do expect that they will be able to play a role in this market, and we are also preparing for that. So we think we have a great offering, and actually from the get-go we can achieve a market leading position in the Canadian market. And I think with that I'll open up for some questions.
For that, I think regarding Canada, that came here that asking if you were already present in Canada before this acquisition.
To a very little extent. So we have no physical presence in Canada. We have obviously Canadian visitors coming to many of our English speaking sites, and we have had some activity in terms of paid advertising, but very limited. So it's really now that we start to have a focus on Canada.
Very good. And could you also tell us a little about what has your market research and sort of statistics previous to this acquisition told you about the Canadian market in regards of sort of the players and the wallet sizes? Are they very similar to the US, or is this a different market?
The Canadian market is a very attractive market. That goes both from sort of a GDP perspective, that it's a wealthy country, and there is a big sports interest. So in that sense, you can compare it to some of the wealthier states in the US, where you have sort of that mix of a wealthy population and a huge interest in sports. And Canada is very similar to that. So for us, Canada will likely be one of the most attractive markets to operate in, especially on a per capita view.
Very good. And sort of turning the eye back to the sort of the US market again, there was a question here regarding market share development. Have you gained market penetration at the expense of sort of key competitors? And could you also elaborate a bit on who are sort of your key competitors in this market?
Sorry, was that for Canada or the US?
That was turning to the US market.
Unfortunately, we don't have really market data supporting this, because what is typically being reported in the States is related to the handle, so the total wagering. And since the focus for our business is more on delivering new customers where there's not much public data, it's a bit hard to monitor that. What we ourselves monitor a lot and is very focused on is our performance in Google and the rankings on keywords that we know are valuable to rank on. And there we have seen in the last couple of years a great development where we're very pleased with how we've performed. I think also looking at our January figures and the launch of New York, I think that is a testament to us being extremely well positioned in the market. So I can't really back this up by solid data, but the sense we have is that yes, we are taking market share and we are getting even stronger positioned in this market. And of competitors, we have one colleague on the stock exchange in Stockholm, Catena Media, that has been around in the States since 2016, because they actually started out with casino and iGaming. They are active, so that's one of the competitors, and we also have private companies that are now growing out of the US, and the competitive picture is definitely similar to what we see in other big markets. So it's a competitive environment, but it's not unlike what we see in really all other sort of attractive markets where we operate.
Good. And maybe a follow up on that. The company DraftKings, is that sort of considered a competitor, or is that more like a niche player in some other, like the fantasy sports, and perhaps also I think they're moving into the gambling part as well?
Well, DraftKings has been a customer of ours, and I think they when the market launched in 2018, due to their legacy as a daily fantasy operator, they had a good advantage because they had big databases of players that they could convert. So from our perspective, it has not been an ideal customer because they actually had these big databases, and even when we were sending players, they could sort of reference that database and thereby not treating it as a new depositing customers, which is of course not ideal for us. But the dynamics have changed a lot in I would say the last 12 to 24 months, with more operators entering, more operators gaining market share on DraftKings. So we are now in a much more competitive market than when it started, and that is changing the environment and dynamics towards a more favorable situation for us. So in that sense, things are actually progressing as we hoped and would like to see it.
Very good. And there was a question here also, that when do you expect New York to be revenue share market for Better Collective? And maybe Jesper, you could just touch upon on the sort of the revenue sharing model and what that means.
Yeah, so starting with the American market as a whole, it's predominantly driven by CPA, so meaning one-time payments for delivering a new customer. And then you are not sort of part of that customer anymore. The other option from a monetization model is revenue share, which is what we historically have been using the most, and especially in all markets outside of the US, this is the dominant model for us, where we would deliver a customer and we'll then take part in the net revenue generated by that customer for the lifetime of that player. We are now actually live in New York and also other states with revenue share, both for some of our long-lasting European partners, but also some of our more recent US partners. It's still very early days, so from a revenue perspective, it's low, but we are building database, and since players will get a bonus in the beginning, that needs to be churned. So you often start out with a minus when for the first month when you send players. So we are in that phase where we are building database, but not really seeing revenue from it yet. And still the US market is predominantly a CPA market, but the competitiveness of the market, some of the tax rates we see in some states, I think are driving the market more towards the revenue share model, because there the operators don't have that high upfront spend in order to attract customers, and will be able to realize revenue and positive gross profit much earlier on when they are on the revenue share model.
Good. And that brings on to another question regarding sort of the market dynamics, if they are similar in the States. You just mentioned that, for instance, tax could be an issue, that it could be taxed different in the States. How much is this individualized, and how much do the sort of the individual states differ from each other when you enter those?
Well, it can vary a lot. So if you take New York, the tax rate is 51%. That's a pretty harsh tax rate. If you go to New Jersey on sports betting, as I recall, it's actually 9% or maybe 11%. So very different from the New York tax rate. And obviously what the states are trying to balance is, okay, we want to have as much tax revenue as possible. Where is the right tax level set? And also from a user perspective, how much will it affect the experience for users? Because with a very high tax rate, ultimately odds will likely have to become lower, which is a disadvantage for the customers. So that is sort of, I think they have not found that perfect tax rate yet. Let's see where it ends. But what I have found quite encouraging for Better Collective is that even in a state as New York with a tax rate of 51%, we have many operators going quite aggressively after customers in that market. And that is really what matters to us, that we have that competitive dynamic where they are eagerly looking for customers.
Very good. And with this sort of impressive growth in the US, could you just briefly touch upon your organization in the US? How is it run, and how many employees do you have, etc.?
Yeah, so we're now more than 200 employees, and we have a management team in place. We have a US CEO that has moved from Denmark to the States. So we have a group management function for the US. We also have, with the acquisition of Action Network, we got a team of more than 100 people. So Action itself has its own organization with ties into the wider Better Collective US business, where we have promoted some from Action and taking from some of the other units and brought them into the group, sort of US group level. So we actually, I think, we have a very strong organization in place with great talent coming from these different acquisitions that we have done. The US is, of course, a very competitive space for recruiting and sort of talent retention. So it's obviously something we have a strong focus on, to make sure that we are constantly an attractive employer to these people. But with the brands that we own and run, we get some help because they are attractive brands to work for. So I think, in essence, we have a very strong and capable setup in the US, but it's also a fierce labor market that we experience over there. And for that US business, we actually have some support from our big operational unit in Niš, where we also have dedicated employees in Niš in Serbia that are supporting the US business.
Very good. Seems like you got a strong base there, and that is also bring on to one of the other questions here. I was asking, what is the biggest threat to maintain this impressive growth? You can say, I guess the train is running now, and I don't think the individual states will move back from here. But are there other threats and other things that could challenge you?
What we are very focused on is the full phase of a market, going from market launch to sort of early market, early maturity, and then eventually to some mature level. And we're very far from being there in the US, but still we have that in mind. And we know what matters at that point in time is to have very strong brands with big audiences and very engaged audiences, because that is where we will continuously add value to our partners, the bookmakers. One thing is to deliver a new customer, but if we play an important role in sort of the lifetime retention of that player, we'll be able to continuously charge the operators for those services, and that we know we are very sort of first in mind for the users, and we actually affect the behavior of these users with the bookmakers. So that is our focus. And speaking to challenges, I think if we're not successful there, we will be less relevant, in 5 years' time. So we want to make sure that we have the brands and the products that are first in mind of the American sports bettors.
Very good. And then there's a question regarding the sort of the New York Post agreement, if it has started to make revenue. I'm not sure if the question goes if it has started to make earnings, or if it's positive, or if you are at a startup cost status. But could you put a few words on that agreement you have?
Yeah. So we spent 2 years to really sort of find the right model for the media partnerships. We have that now. So we actually have a pretty solid recipe for launching such a partnership and also drive revenue from the get-go. And I think New York Post has probably been our best launch, because and that was also fairly nice that it coincided with the launch of New York as a state. So we saw immediate traction with that partnership, and it's going very well, and living up to all our expectations and beyond.
Very good. And then perhaps one last question also regarding to Canada from my side. It was financed by cash this time. You had a new credit facility with one of your banks, as I understood it. But you have previously also used shares, as I recall it, in some of these trades. Could you put a few words on this decision this time?
Normally we will use shares in scenarios where the founder will stay involved. So we would like to create that incentive that yes, you may be on an earn-out or some form of deferred payment that will incentivize you to perform for your own business. But we definitely also want you to care about the larger Better Collective group, and that is where shares come in very, very handy. And then you have maybe noticed that we have a share buyback program ongoing right now, and that is because we also take the view that if we know we may need the share to pay some founders, we take a view on whether is it attractive for like issuing new shares. Do we believe that is in the interest of shareholders? And if we find that is not attractive from a dilution perspective, then we will rather consider buying the shares in the market and give it sort of that way.
Very good. Thank you for that, Jesper. And I think we come to the end with the questions. So just want to thank you very much, Jesper, for this presentation. Very interesting to get to know more about your US and now also Canadian business.
Thank you very much for having me.
Thank you for listening in also, and for a lot of interesting questions. I just want to wish you all a nice day and a good weekend later on. Thank you.